Okay, let's dive right into this. Welcome to today's Explainer, where we are unpacking a really fascinating strategy from the tax world that honestly feels like a tightly kept secret. We're talking about the 14-day tax-free Airbnb loophole. Now, if you've ever even toyed with the idea of renting out your space as a side hustle, you already know taxes are a massive factor you have to weigh before you even get off the ground. But today, we're exploring a completely 100% legal strategy outlined in our source material that is literally designed to keep your side hustle money right where it belongs, in your pocket. Our source material today kicks things off with a question that, let's be real, resonates with pretty much everyone. Ever wish the government would stay out of your wallet for once? Just take a second and let that sink in. The source actually asks us to imagine the prospect of making thousands of dollars directly from our own homes, completely tax-free. I mean, for anyone looking to generate a little extra income, the idea of keeping every single penny you earn without handing a massive chunk over in federal taxes, it sounds almost too good to be true, right? But as we'll see, it's a very real opportunity that most people just completely miss out on. So to help us wrap our heads around exactly how this works, we're turning to our insider guide for this explainer. This is Brian, a CPA from a platform called Hidden Tax, and his mission statement is just perfectly clear. He says, "We find the math the IRS doesn't advertise." Brian has pretty much dedicated his entire expertise to exposing these massive financial opportunities that are just hiding in plain sight. Because let's face it, the tax code is incredibly complex, right? The specific rules that actually benefit the everyday homeowner, yeah, those aren't exactly printed on billboards or taught in high school. So how does this all build into something you can actually use? Well, Brian calls this a total game changer, and honestly, it's really easy to see why. If you are someone who lists, or maybe you're currently thinking about listing your primary residence on platforms like Airbnb, this specific strategy fundamentally changes the entire math of your side hustle. It basically transforms your home from a standard living space into a highly efficient, completely tax-free income generator. Okay, here is the official mechanism that makes this whole thing possible. I really want you to pay close attention to this definition, because this is the official IRS terminology that proves this loophole is completely legal. It's called the minimal rental use rule. By definition, this is a tax rule allowing homeowners to rent out their primary residence for up to 2 weeks without paying a single cent in taxes on that income. It is written directly into the tax code. It's basically an exemption designed specifically for short-term rentals of a home you actually live in year-round. So the absolutely crucial point here is this specific number, 14. 14 days. That is the magic maximum limit you can rent your home out per year for the income to remain totally tax exempt. If you rent it for 15 days, well, the rules change entirely and you're suddenly back in standard taxable rental income territory. But if you stay at 14 days or less, you are operating squarely within this beautiful tax-free safe haven. Now, what's really interesting is how the earning potential scales within that super short window. Let's just compare two profit scenarios side by side to put this into perspective. On one hand, let's say you earn $1,000 renting your place out during a busy local weekend. On the other hand, maybe you live near a major event, like say the Super Bowl or some massive music festival, and you actually manage to earn $10,000 in those exact same 2 weeks. Regardless of the massive difference in the actual amount earned, the tax outcome is shockingly identical. And this brilliantly illustrates the math exactly as Brian from Hidden Tax lays it out. Whether your income earned over those 14 rental days is $1,000 or $10,000, the final federal tax owed remains the exact same, zero. Literally zero federal taxes paid on either profit amount. Your take-home pay is exactly what your gross revenue was. That means every single dollar you charge your guests stays right in your bank account. No way around it. That is just incredible. But Brian offers a really strong warning about all of this. He says, don't let economic theater trick you. So often people just assume that all income must be heavily taxed, right? So they just blindly pay without ever understanding the specific exemptions that are actually available to them. This economic theater can totally trick you into overpaying. The whole purpose of understanding this rule is about keeping 100% of your hard-earned cash. It's about recognizing that the rules aren't just there to take your money, sometimes they're actually there to protect it. So, let's clearly break down Brian's actionable advice into 3 simple steps. Step 1. Rent your primary residence for 14 days or less in a given calendar year. Step 2. Report the income properly. Now, this is incredibly important. You still have to show the IRS what you did so they know it actually qualifies for the minimal rental use rule. Actually, to be clear, you don't just hide the money under the mattress, you report it under the correct legal exemption. And step 3. Keep 100% of those side hustle profits in your own pocket. Because Brian's ultimate mission is to help people protect their wealth, he leaves his audience with a really strong call to action. In the source material, he urges his viewers to subscribe to Hidden Tax and join their Patreon for what he calls more truth regarding these exact kinds of financial strategies. And as he wraps up his advice, he notes quite warmly that he's rooting for his listeners to have a very nice day while they go out and seek more of this financial truth. Which leaves us with a really fascinating thought as we wrap up this explainer. If a massive 100% legal loophole like the 14-day minimal rental use rule is just sitting there, completely waiting to be utilized, what other legal tax rules might you be missing out on? It definitely makes you wonder what other insider math the IRS isn't advertising, and honestly, how much more of your own money you could be keeping.